In this lesson, we're going to look at using multiple moving averages to determine market phases. This is where the multiple moving averages are so good, in that it makes it so easy for you to see the market phases. On the screen, we have a number of market phases marked out, and I'll go through them one by one. Messy phases are when the price just ranges sideways in a random way. The worst type of market to try and trade, but again, the multiple moving averages show you the sideways market. We then get knotting, where the prices knot, and you can see there's a couple of times that it's happened here where they knot and they almost become one color. Those are warnings that there could be a very volatile breakout, and in fact here at the last knot quite a nice volatile breakout occurred. So we're always looking for knots when trading the multiple moving average systems, because we know that there's a good chance of a volatile breakout from those knots. And when that happens, the market goes into a trending phase. We call this the waterfall, although it's actually the water's going in the wrong direction in this particular case. After trend, the market will either reverse or consolidate. And in this case, we have a consolidating market, and it does give specific signals that it is consolidating. After consolidation, the market can either reverse or continue. In this particular case, we're getting a very clear multiple moving average signal that there is a trend continuation. These specific signals will be covered in future lectures. Then here's another example of a trend continuation signal. Very often a trend can also reverse quite sharply, and here we see an example of the multiple moving averages giving us a strong reversal signal. And most importantly, we want to know when the trend ends, and here we have a clear end of trend signal. These will become clearer as we work our way through the course, but the advantage of knowing these phases and seeing them very quickly is amazing when you're using 12 or 16 currencies to trade. Within 30 seconds, you can see the phase of each currency and determine its tradability. One of the big advantages of using the magic multiple moving average system. In the next lecture, we'll be covering the specific trading signals